Good afternoon, everybody, and welcome to a special edition of Trending Thursdays. My name is Glenn Tompkins, Senior Instructor here at VectorVest. If you can hear me, by all means, please respond when in the affirmative, preferably with VV Nation. So, let me explain to you why this is special. I'm actually recording this on Wednesday, May 19th, instead of tomorrow, which is the time that we normally have Trending Thursday. Why is that? Because I'm on my way to Tampa to go see my son graduate from high school. But I didn't want to forget you guys, so we are pre-recording a day before just so that you have a Trending Thursday nonetheless. Now, because this is recorded, you can still ask questions. I will have a couple of people in the background moderating to answer some of the questions as if I were live. So I'm putting that out there as well. Somebody's going to say, I know it, and I want whoever's in the room who's listening to help the room out. Somebody's going to say, is this live? You guys let them know what's going on, all right? I got some VV Nation folks that will help in the moderation for me while I'm not here. So I'm going to depend on you guys for that. All right. Thank you for being here. We appreciate that. If you're brand new to the channel, please hit the subscribe button. All right. Help us to grow the channel. We are growing the channel. And guess what? You know that you're now here on our new streaming channel. You're on our new streaming channel. If you haven't already subscribed to the channel, please do. Let's make this grow just like our other channel. We grew enough to the point that we now have 2 channels, and you're now watching this on the second channel. Don't forget to hit the bell icon as well, and comment in here today. Again, I will have some people in the background moderating as if I were live to answer some of your questions along the way. This is a room where we look at what stocks are making the news. We use the power of the VectorVest software. I got a couple of cool tools for you today to look at, so make sure you stay throughout the whole presentation. I'm going to show you a little bit of the power and the flexibility of the VectorVest software that some of you may not know you have the ability to do. I do have a special guest again this week. We're going to get to that after I get into the market overview. You don't want to miss this. You're going to get an opportunity of a lifetime to learn a new way to trade in the market and consistently make money. All right, with all of that done and said, the first thing we always talk about is the market. And because today is Wednesday, today the Fed minutes came out, so I'm going to incorporate that into this presentation. We always start off with news that's going on in the market. And where's my news stories, Joey? You broke them. You broke my news. There we go. Let's go to our first news story. All right, so we all know that what's hot in the news is inflation. But this just came out. The U.S. shoppers continued stimulus-fueled spending in April. All right, so people are still spending money. The stimulus money came out to buoy the economy. It put a lot of money into a lot of people's hands, but the stimulus also helped a lot of people who were not as fortunate as a lot of other people who were out of work. And I think that it was timely in that they needed to take care of bills, but other people were able to use that money and put it into the economy. And guess what? It's working. The economy is running hot right now, and inflation is an issue. Now, when we talk about inflation, how about this? Home builder confidence is high, but rising costs of materials present major risks. So everybody wants to build a house. They want to get out of the inner city where they were living close to work, and now they're buying houses. So now, because they're working from home, they can have a home office and all of those things. But lumber, in order to buy lumber nowadays, Joey, you got to take out a mortgage just for that. And by the way, sitting side saddle to me is my producer, Joey. Say hi, Joey.
Hi, Joey.
All right, so lumber is just super expensive, adding on to the cost of houses, but home builder confidence is high. People still want to buy houses, but I think it's hindering them with the cost of the materials. Now, as we still go down the path of inflation, Fed minutes came out today. So I was able to do that while we're doing this recorded session. Fed officials says they are closely watching for the right moment to make policy shift. So what are they saying? They're saying that right now inflation may be running hot, but they don't see it as a problem. I've been saying here on Trending Thursday for a minute that inflation is a problem. The Fed also says that they have tools to overcome the rising inflation, and this is, who is this dude? This is the Atlanta Fed President, Raphael Bostic. He says, as I go down in this list, if we get to a point where we were comfortable on the public health side of the pandemic was largely behind us and was not going to resurge in some way that was surprising, then I think we could talk about adjusting monetary policy. So in this case, he's also looking at what's going on from the pandemic side. But where is it? There was another story that came out. I don't think we're quite at that point yet, but it seems like we're getting close. All right, that's the St. Louis Fed President James Bullard told reporters on the speech Wednesday. I don't think we're quite to that point yet, but it does look like we're getting close. So there is, I don't want to call dissension. I want to say that there's a differing in opinions in regards to how to handle inflation. Now, I did see another story out there that Bostic said that inflation is a healthy thing for the economy. Rising inflation means that prices are running hotter, and that means that we do have a good economy, or that the market is, there's a lot going on there, so I'm going to let the story speak for itself. The Fed still thinks that inflation is well within hand, but you are going to see some differing opinions in regards to what to do about inflation. And there we go. So those are my three stories on the market. I'm going to get into the software, and I'm going to get into our watch list of stocks. Actually, before I do that, let's do one other thing. Let's go to the homepage of the software. And the market was, today is Wednesday again. The market was down big time today. The market retraced and came back. The market pulled back again after the minutes. We can see that all of the major indices right now are still all in the red. My guest says that today, Wednesday, that one of the indices is going to finish in the green. We'll see what we got to say about that. But he'll talk about that. And I'm watching his face right now as he's smirking a little bit. He's smirking a little bit. But all of the major indices are down. And I was anticipating that after the minutes came out today, that there would be a reverse in the market, that the market would start to go up. But we'll keep our eyes on that. All right. Now let's get... That should have been maximized. That is maximized. Let's get into my watch list of stocks. And every week, we always look at two stocks from the purposes of, from a market timing perspective. If you're not a VectorVest subscriber, I bring up the S&P 500 or the spiders. And if you are a VectorVest subscriber, I bring up the VVC or the VectorVest composite, which tracks the movement of over 8,700 stocks. And we feel that it is a better representation of the broad market move of the market. Now that both of those are highlighted, I'm going to right click. I'm going to view the stock graph, bring that up real quick, put this on a 3-month graph. This is the market. All right, so on the spiders, big down day today. Here's the view of the spiders. Big down day today, but an open candle, which means that the open price was started 406.92. The price right now is higher than the open. That's why it's an open candle, but it's still red because it's lower than the previous day's close. Big gap down in the market this morning prior to the minutes being red. But look at there is a resurgence. And right now, still all of the major indices are in the red, but a big, I call that a bullish bearish candle. It's a bearish candle because it's lower than the prior day's close, but it's a bullish candle because now the price is higher than it was at the open. That's a little bit of a reversal within the day. Now that's on the S&P 500. Let's move over to the indicator that tracks the movement of over 8,700 stocks. Same kind of scenario. Open candle, big wick at the bottom. That's a lot of bullish tendency. We do have two levels of resistance to get through, one sitting at 63.95 and one sitting at 64.39. A couple of days ago, though, the market broke through both of those levels of resistance, causing to now be levels of support, and with the last couple of days, pulled back. But notice that we are higher than the previous most recent low, which happened here on 5/13 of 2020. 21, just 6 days ago, right? Today, 19, yeah, about 1, 2, 3, 4. Yeah, 6 days ago. All right, so keeping all of that in mind, that's where we stand. The market is not in a free fall. The market is not in a rambunctious upward move. The market's just hanging out until the story of inflation comes to fruition and settles in one direction or another. But one indice or one ticker symbol that you might want to take a look at if you're more entailed to is the VIX. The VIX is popping big time, big moves in the market. So the volatility on the S&P 500 is definitely spiking right now. That may not be a bad trade to look at from a short-term perspective. All right, with the volatility, up and down, volatility increases, and that's where we stand. All right, so from a market timing perspective, if you're a VectorVest subscriber looking at our homepage guidance tells you things like the market's having a hard time making up its mind. All right, primary wave is up, the confirmed call is down, the DEW is down, a lot of things going on. Personally, I'm going to tell you this is probably a good opportunity to keep your powder dry. On an up day, take advantage of an up move. On a down day, take advantage of a down move. If you don't want to do all of that, just sit tight and manage your trades. All right, so that's the market overview. That's where we stand. That's the news behind it, and keep in mind that inflation is the big thing. All right, Joey, now we're going to bring in my guest for the second week in a row. Will be our manager of retirement. His name is Jim Penna. He's going to come up today, and last week he did a nice short presentation about what a covered call was. It's one of the most simple, easy to do option trades that's out there. All right, and he'll tell you things like way back in the day in the IRA account, that was the only option trade that you could put on. There's not a lot of risk involved in it, but he's going to show you a way of being able to generate income from the covered call. And Jim, this is your opportunity to teach these guys something new and give them an opportunity to jump on board with the ability to generate income from this option trade. So with that, Jim, take it away, man.
Thank you, Glenn. Thank you very much, everyone, for taking the time. I'm like Ed McMahon to Glenn's Johnny Carson here 2 weeks in a row. So it's good to be here. And I asked if I could have a few minutes of Glenn's time. We talked a little bit about last week the webcast that I was doing on covered calls, and I wanted to take, I don't know, maybe 10 minutes or so, walk through the power of covered calls. Okay, that's really all a covered call is. Somebody's willing to pay you for the right to take away your stock at a higher price at a later date. That's all a covered call really is. We're going to talk about it a little bit. And as with any trade, we know that you have to have your objective in place before you hit the enter button, whether it's growth, day trading, swing trading, long-term, whatever it might be. With a covered call, our objective always is to generate income, always to generate income. What we do, I'm going to talk just briefly about a covered call versus an uncovered call for those who may be new to options or to covered call writing. We'll walk through what a covered call actually looks like. And again, we'll discuss trade objectives. Covered versus uncovered. What does that mean? What is a covered call? Well, earlier I showed this in an earlier presentation. We have our option seller and our option buyer. So when it comes to a call option, what you have is your option buyer paying the option seller for the right to buy the stock at a certain price by a certain date. That's what the contract, those are the strictly defined terms and conditions of an option contract. When the buyer does that, the option seller who writes the contract or sells the call, those two terms are synonymous here, selling and writing the call, he now has the obligation to either sell or provide that stock. In other words, if the buyer says, okay, I'm going to exercise my right to buy the stock, he can call away the stock from the seller. Okay, that's how the option buyer and seller works. So that's just a quick review on how a basic option works. Okay, so let's talk about doing that if the seller were to sell what's called a naked call. And all that means is that he does not or he or she does not own the shares to fulfill the obligations of being a call seller. You are obligated to provide for one contract 100 shares of the underlying stock at a certain price by a certain date. If you don't own those shares, you have done what's called selling a naked call, which is a very risky trade. For those who are not, would say it's a more advanced trade. It really, at the end of the day, it's just like shorting a stock, but you really have to be comfortable and know what you're doing. But if you don't own the shares, you're selling what's called a naked call, and we certainly don't advocate that to a vast majority of our customers. So if the call buyer has the right to buy the stock, again, that call seller says, from his perspective, if the time comes, I'll need to go out and buy the shares in the open market so that I can sell them or give them to the buyer. Now, if that stock takes off and you don't already own the underlying stock, you have to go out in the open market. So, you may pay dramatically above the strike price to then lose all that money and have to give the stock back to the call buyer. So we don't want you to do that. Let's talk about the covered call, though. Very different trade, very different risk reward ratio here. In the covered call, of course, what it means by covered is that you own the underlying stock, right? So if the buyer were to fulfill his or exercise his right to buy the stock, as the call seller, you're okay with that. Because if that time comes, you just give him the shares that you already own. And it goes back to the definition, right? This guy's willing to pay this guy to take his stock away at a higher price at a later date. And he's going to pay him for that right. So the covered call simply means you own the underlying shares. So what I did was I put this on a chart of a trade we've done recently in our retirement coaching group. We had a profitable trade on Freeport McMoran, and just to visualize what I'm talking about. So FCX is trading at 38.69. Okay, we purchased the stock at 38.69. We then simultaneously sell the call option on Freeport with a strike price of $40 per share. And we use an expiration date at this date, so it's just over 30 days out, to June 18th. Okay, so here's our expiration, here's the strike price, and here's where we purchased our stock at. We sold that call and we're paid $2.26 a share, or 226 bucks. So if we do that, we ask, what does that mean? What did I just do? Right? What position did I just put myself in? Well, since one call option, as I said, controls 100 shares, at 226, I receive 226 bucks. Comes into my account, that's my money, regardless of what happens with the trade. 226 is mine. Remember, we own the stock at 38.69, and we sell the 40 strike. We sold the right for the buyer to take our stock away at $40 per share. A what if situation? What if the stock closes above 40 bucks at expiration? Well, as the seller of the call, we know we'd be obligated to provide that stock. So they would, where the name comes from, the buyer would call away my stock at the strike price of $40 a share, which is fine with me because I own it at 38.69. So I make what, $1.31? Well, let's walk through that. If my screen will work. There we go. So now if I didn't own the 100 shares, of course, I'd have to go out and buy them at whatever the current market price was. So let's just say, for instance, the buyer exercises the right to buy the stock. And when they do that, just for sake of example, the stock's trading at 47.50. Right? I have to go out into the open market, buy 100 shares of the stock at 47.50 just to have it called away from me at $40. That's not good. Right? It'd be a lot worse if the stock really gapped up for whatever reason. Okay, that's if you don't own them. If you do own them, oh, and by the way, so that's a naked call. Don't do it. Don't do a naked call unless you're an advanced option trader already. Now, if you do own the shares, what happens is they would simply call away my stock at the $40 strike price. Okay. that's my goal, right? That's my objective. That's a good trade. I don't care if the stock goes to 50 or 60 or whatever, because my objective when I hit the enter button was to collect the following. Okay. This covered call had a main objective, and my goal was to collect my max profit or a percentage of that max profit. Now, if FCX were to close below $40 at expiration, of course, I wouldn't be obligated to sell my stock. I would still own the stock. So at expiration, I would keep the 226 bucks, whatever profit lost that I had on that shares, I'd also be responsible for. So if the stock, for instance, closed at, let's just say 39.69 at expiration, well, I get to keep the $226 plus the $1 in capital appreciation. At expiration, I would make $326. Okay. So even if the stock were to go to down a bit, as you'll see, our break even is even lower than that, and we would still profit. Now, of course, if the stock were to fall, then losses can occur. Let's look at it this way. This is just a P&L profile of owning the stock. On the x-axis down below is the price of the stock. As it rises, so too does the profit on the stock. If the stock falls, your losses occur, and of course, theoretically, the stock could go to zero. That's just the basic if you own a stock. Now, let's look at the same P&L profile if you have a covered call sold against that stock. Now, if the stock rises, of course, the value of our position will rise, and so will our profit. What we have to remember is that our profit is capped, right? We have sold that right for someone to take our stock away, and so we cap our profit. And that max profit is determined by the capital appreciation, which we said was what, $1.31 plus the 226. I also know that my break even at expiration is down at the stock price minus the premium received. So what I've done is built a cushion, right? I've lowered my cost basis and built a cushion so that stock can actually close a little bit lower at expiration, and I would still make money. Now, what I was saying earlier is, of course, our max risk theoretically is that the stock goes to zero. So selling the covered call adds absolutely no risk to your position. As Glenn said, that that's why you're allowed to do them in your IRA, among other trades. But I told the story. I took my Series 7 in 1992, and at that time, the only option trade you could do in your IRA was a covered call. And that's because it adds absolute, in fact, lowers your risk because it lowers your cost basis. Okay. Let's take that setup and actually look, and this was, again, a trade we actually did. We actually did it with 2 contracts and 200 shares, but I did just 100 for the math here. So our capital appreciation potential was $1.31. With our option premium at 226, it gave us $3.57 per contract for our max profit, or $357. Okay, so our max profit is capped if the stock goes to 40. And then we set our break even as the 38.69 minus 226. So like I said, the stock could actually go to 36.43, and we still wouldn't lose any money on the position at expiration. So it's I like to call it kind of a built-in stop loss or a built-in cushion that we do. Again, it will only cover it to there. Losses will occur. That's why we have to be sure we have our proper risk management techniques in place. And again, as we said, our max loss is theoretically the stock going to zero. So that's what it would look like if you were looking at the chart here. So always remember that our objective in the covered call, while there are several advantages to the covered call: lowering your cost basis, partially hedging a long position. But for what we're going to talk about is doing the buy right. And I'm going to talk about the covered call bootcamp in a minute. Our goal, our objective is to generate a safe, steady income. What we used to call the payday portfolio. When Dr. Delito created it a pretty long time ago now, there was a process And we're kind of recreating it in a way that you can, on a weekly basis, generate some safe, steady income using a very specific technique and a process. So I remember, I tell the story all the time. When retirement services began, there in a talk with Dr. DeLito, I would tell him that when we were on the road, or seminars, or the money shows, whether I talked to folks on the phone or email, in some form or fashion, the question would always come back as to, how do you keep from running out of money in retirement? And I talked to Dr. D about this, and he said back to me, in only the way Dr. D can do, he said, James, just tell him to keep making more money. Okay, just keep making more money, he said to me, and I never forgot it. And so to that end, I want to just take 5 more minutes before I turn it back to Glenn and talk about, if my screen will change slides. And talk about the Covered Call Bootcamp. First, let me share a quick story. Jerry, we had the pleasure of talking with Jerry a week or two ago about him taking the retirement solution course and learning about the covered call process in our retirement coaching group. And these are his words. He said that he had gone from a hit or miss with no methodology process, right? He had no real technique, no process that he was using, to creating a nice steady flow of consistent monthly income. Over the last year or so, he said he had 44 trades, 70% winning trades, which averaged out to about a 2% monthly income. And again, I'll use his words. This is what he had told us, is that number of percentage wins would have even been higher, but he admitted to kind of stepping away from some of the rules here or there. So, which I thought was interesting. But he's generating 2% monthly income. And the way I try to compare that, just somewhere to put a concept behind that, if you had a really good dividend paying stock, right, a good quality stock that paid 2 or 3 or 4% in annual dividends, right, that was a good quality stock and continued to raise and grow their dividends, that's a good investment for a way to generate income. And I wholeheartedly support that. But if you could add to that, and just look at it that way, if you had a stock that paid you 2% a month on a monthly payout, you would be pretty happy with that. Okay. So Jerry followed the system, took the course, we had a great conversation with him, and he had some great results from our retirement coaching group. And real quick, I'll share the results that we had in our retirement coaching group in 2020. We had quite a special year. We were up 25% at the end of the year, annualized rate of return. We did a total of just 38 trades because we didn't do one every week if the market was not cooperating. And we had 76% winning trades during that time. Okay, so that was our take last year, and it worked out really well. Doing well this year, just with the market, we haven't done as many trades, so we'll allow the rest of the year to play out. But we still have 7 of our nine round trip trades this year are profitable, so still a really good percentage on successful trades. So, how to get started creating your own payday portfolio? I want to take just 2 more minutes and invite you to the Covered Call Bootcamp. Okay, in this bootcamp, and I'll go over the time frame in just a moment. We're going to talk about set a foundation for what is an option, how the covered call works. We'll go a little deeper into what I just talked about here. The path to success, I believe, for any trading system or technique that you use is to know these things: when to trade, what to trade, the proper setup of that trade, right? Because just because the market has green lights in the price column and we go out and find a high ranked VST stock doesn't necessarily mean we're going to have the proper option candidate for our covered call. So there are very strict rules and guidelines that we use for the proper strike price, the expiration date, and other things, the position sizing, things like that. Then finally, we'll talk about managing the trade. And it is, again, the same in so many different trading techniques where you may get all this right. When to trade, what to trade, set the trade up just right and enter it. And then you're not sure how to manage that trade once you're in, right? That's usually one of the big downfalls for a lot of folks who are just starting out. So we're going to talk about managing that trade as well. And we'll even show you how to enter the order with your broker if you're new to that. Real quick, it's going to work out. We've got May 25th is when training starts. It's a short term. It's a quick turnaround. May 25th is when we start. It's going to be 4:30 Eastern time all week, Tuesday through Friday. Okay. All of the modules, all of what we're going to talk about is recorded and archived in the VectorVest University. We're going to go these days here, these 4 days of the week. June 1st will be our final training day. And then on Wednesday, June the 2nd, you will be ready to place your first covered call trade. If you've traded covered calls, it may not be your first, but it'll hopefully be the first time you've set one up using a proper technique and a proper strategy. So you'll be ready to go with that. So it's a week long. It's quick. It's intense. 4:30. The sessions won't be too long. It's not going to be an hour and a half each night, but we're going to go through everything. You're going to have archived and recorded all kinds of resources in the VectorVest University. If you can't make one of the live training sessions, it'll be archived in the university a little bit later on that evening. Okay, so that's going to be the setup. It's going to be 1 week to get your first profitable trade in there. You can, once we walk through this, I'm going to give you the link. You can get a head start before May 25th, because as soon as you sign up, you're going to have access to the course and all of the resources immediately in the VectorVest University. So you'll get an email with instructions on how to do that. Whoops. So covered call bootcamp, the regular price is $7.95. Because you were kind enough to spend time with Glenn here on Trending Thursday, we're going to give you a price of $3.95. Okay, we're going to save you $400, give you the $3.95 price that'll be available to you up until, let's see, as Glenn said, we're recording this Wednesday. It'll be about 5:30 or so, maybe 6 o'clock on Thursday evening. This price will go away. So you're going to want to take advantage of that. Go to vectorvest.com/CC Bootcamp. That's covered call bootcamp. Okay, and we're pretty confident in this course. And so after the bootcamp is over, if you show you've done the work and you're still not satisfied, we're going to gladly refund your $395. I laugh all the time. I always say there's no such thing as a risk-free trade. Hit the enter button, place a trade. There's risk always, except here, because we're going to give you your money back if you're not satisfied or didn't get what you thought you were going to get out of the course. So again, vectorvest.com/CC Bootcamp will get you there. Again, thank you for taking the time. And thank you, Glenn, for taking the time. And I think I'll be helping moderate some of the questions tomorrow. I'm all right to say that?
Yes, you are.
All right, great. All right. So I will go ahead and swing it back to you. And if you've got any questions on what I went through, I'll answer them. Otherwise, I'll turn it back over to you.
All right, VV Nation, especially for those people who are brand new to the software or brand new to the channel, this is a great opportunity to take advantage of some of the power that the VectorVest system has to offer. Do you have to buy it? No. But will it behoove you to buy it and consider it? Absolutely. And as Jim says, it is risk-free. It is risk-free. If you can show that you've done all of the work and you honestly feel that it's not for you, we'll give you your money back. All right, we'll give you your money back. I don't know of anybody out there who's doing something like that. All right, but it's key. If you can show that you've done all of the work for the 7 days and it still hasn't worked for you, then we'll give you back your money. So VV Nation, this is a great opportunity for you to help from an investing standpoint to put more money in your pocket, generate income. All right, Jim, thank you so much for being here. I appreciate it. It's been 2 weeks in a row. Last week, he just talked a little bit about the covered call, and this week he went a little deeper into what the covered call is all about and what VectorVest can do for you. Don't ask what you can do for VectorVest, but what VectorVest can do for you. All right, and you know something? I always like to say that VectorVest is like the Dow scrubbing bubbles. We work hard so you don't have to. And we're going to put this in your hands to help you to make money in the market. All right. So, again, thank you for being here for that. And we're going to continue on with our traditional Trending Thursday. I've got 2 more stories to talk about for you today before we end. And let's get into our next story. So, again, Joey still has this up in the background for the boot camp. I like that. Who put that together? David did it? Okay. All right. Let's go into our next story. So we all know that with inflation and the dollar and this, that, and the other thing, gold is on the move. So, of course, I got a gold story. All right. And that was as of today, Wednesday, May 19th. Gold is 0.7% lower this morning as it's trading closer to 1850 price level again. What about other precious metals? So gold is making a move, and I wanted to touch on it as if it was the right time or almost the right time or not the right time to be in gold. So that was just a headline. And I'm going to go back into the software, go back to our watch list. I've got 4 gold stocks to take a look at. One, at the top of my list of watch lists, in my watch list, I'm only looking at 10 stocks today. And the top of the list, it's got the best combination of value, safety, and timing. KNTNF, K92 Mining, trading at $6. Ooh, I don't like that number. It's just trading at $6.66. Ooh. All right, with a value of 10.20, undervalued. Another good one. What else is at the top of my list? Endeavor Silver, EXK. Second best stock in the list. And look at that, trading really close and same in price. What else is at the top of the list? Nugget, which is an ETF that tracks the gold in itself. And then last but not least, what moves gold? We all know, everybody should type in the room, even though I know this is recorded. What moves gold? The dollar. So I'm going to look at UUP, which looks at the bullish dollar. If it's going up, normally gold will go down. If it's going down, normally gold will go up. Why is that? Because when the dollar starts to fall, people feel more comfortable as a hedge to be in gold. One of these is silver, Endeavor Silver, but the gold miners is here, and a stock as well as the dollar. All right, so tell you what I'm going to do. I'm going to right click and I'm going to show you something, especially if you're not a subscriber to the software, I'm going to show you something that's really cool. I'm going to view the stock graph. All right, I've got 4 stocks here. I'm going to put this on a 3-month graph. Here's KNTNF moving up. So showing that as a stock within this space is moving up. Look at the big spike today. It did go up. It pulled back down, but did recover off of its lows today. But I've got 4 stocks in here. Here's something really cool. I'm going to go over to the top left-hand corner. I see a little box right here. Joey, it doesn't show, but there's a little box right here. All right. Can you have a, it is? Can they see it? Oh, they see it now that I clicked on it. All right, but there's the little box. I'm going to highlight all 4 boxes. I'm going to take all 4 of these stocks and put them into one frame. Watch this. Boom. Okay. It took a little longer. All right, so now all 4, KTNNF, NUGT, EXK for the Endeavor Silver, and UUP for the dollar. I'm going to put all 3 of these on a 3-month graph. 3 months, 3 months, and 3 months. Boom. So now they're all in the same time period. I'm going to put more room on the graph. I'm going to move the graph control panels over. And last but not least, I'm going to fill in a lot of this stuff that's in here by going up to the fill mode in the top. Click it. Boom. All 4. Take me off the screen, Joey, for a second. All 4 graphs are shown. Here is the direct correlation between the dollar and gold. Here's the dollar shown down here. As the dollar is falling, silver is starting to rise. Gold is starting to rise. All right, that's the index. And KNTNF. And I bet you if you look at the majority of gold stocks besides just K92 Mining, you'll see a lot of the stocks exhibiting the same characteristics. But look at that point where the dollar hit a high. All of these started moving up. Now, it's interesting as we look at when the dollar started to go bearish by way of the 3 and the 8s, you'll notice that all of the others started running up. So let's do this. Let's go undo the fill mode, put on my date line. It was right about here on 4/6. Let's go date line. I'm going to put the date line on all of these. On 4/6. 4/6. That's where the dollar, UUP, which is I'm looking for the bullish dollar. When I look at it, on 4/6, it went bearish. Let's go look at when these went bullish. Notice the 3 and the 8 on EXK. When did that go? On 4/8. Direct correlation. Where did the 3 and 8 go bullish on KN and TNF? On 4/1. That was actually a few days before UUP went down. And here's another one on Nugget. That was also on 4/1. So this does show the direct correlation between what's going on with the dollar and what's going on with gold. You hear me talk about that a lot, but today I put all 4 of these and I spread these out evenly or nicely. One on silver, one on any one of the gold stocks that are out there, and an ETF on the gold miners. All right, so keeping all of that in mind, this does show with the 4 quadrant on one screen, the direct correlation between gold and silver. And I wanted to definitely bring that to your attention because it's a very telling sign, number one, but it also does go to show some of the flexibility and the power behind the VectorVest system. Guess what? You want to be able to do this? I'm going to do this real quick. If you look down in the description, you'll see a link for a 99-cent trial for 30 days. You'll be able to do this same kind of analysis, all right? Just putting that out there. We offer it to our YouTube subscribers or to our YouTubers, 99 cents for 30 days. If you want to keep it, you keep it. If not, you cancel before the 30 days is done. All right, so that was on gold. All right, and now I'm going to go to my last story. I've only got one more story for today. I'm going to go to my last story, and it's about clean energy. So we've talked a lot about clean energy on the channel. Normally when we talk about clean energy, it's normally in the EV space, electric vehicles. That's been a tough space right now. That whole industry is getting knocked out. And I don't know a whole lot of why that is. And, you know, can you say that the traders left the station? I don't know. I don't think so. I still think that clean energy has the ability to take off because this story says the U.S. electric power sector is halfway to zero carbon emissions. That's a long way in a short amount of time. All right, and that was an aggressive commitment to make, halfway to zero carbon emissions, which is freaking awesome. All right, so this week, outside of the electric vehicles, I wanted to show some other parts of the clean energy spaces you guys can take a look at. I'm going to get back into the software. My last 4 stocks for today are DQ, DACO Energy. One of the best stocks in this space is REGI. First Solar for solar. And I've got a more aggressive play in IEA, infrastructure and energy. And you know that there's an infrastructure bill out there. I thought it would be good to take a look at a company from a clean energy perspective, looking at infrastructure. So these are my 4 stocks. DACO Energy trading at 76, value of 142, nicely undervalued. REGI trading at 65, value of 90, nicely undervalued. First Solar, 74, value 86, nicely overvalued. IEA, which is my more aggressive play, is the only one that is overvalued, trading at 1192 with a value of 947. If we look at the fundamentals of these stocks, relative value, relative safety on DQ are above 1. Our relative value on DQ is at 177, relative safety at 1.21. REGI, relative value at 1.46, relative safety at 1.42. First Solar, RV at 1.25, relative safety at 1.11. And again, my more aggressive one does have good upside potential with RV being above 1, relative safety just at 1. All right, and if you look at my stocks in my list, my clean energy, for the most part, are doing well in the list with the exception, again, of the IEA and possibly at First Solar. All right, let's take a look at these stocks. We'll right-click. look at them on the stock graph, and let's do the same thing again. Put this on a 3-month graph, okay? Let's go up and look at all 3 of these together, or all 4 of these together. Go up to the top left, put them on. There they are. Let's go put all of these on the 3 months. I'm loving this feature. We don't talk about this enough, but especially when I'm looking at 4 stocks within an industry, I want to keep my eyes on them. There's IEA, and one more. Go ahead, Joey. And one more as Joey takes me off the screen so you can see them all. Let's go to First Solar. Now, when I sit back and I say clean energy is still a way to go, notice that, remember, this industry has been beaten up. I like by looking at these graphs, look at these levels of support. Support. Take that off. Support. Support. All of these are coming off early from the levels of support. All right, up day today, open day today, but still lower than the prior day's close, up day today. All 4 of these. And IEA, again, I like it because it's in that infrastructure space, but from a clean energy perspective. IEA is something to definitely keep your eyes on, but all of these exhibiting the characteristics of the clean energy space getting beaten up. How about they're ready to rebound? These could be good plays to keep your eyes on. I love how they all look. RT getting close to, on this one, they're getting above 1 where it shows it an uptrend. REGI is the closest right now, but all of them have RT moving higher and price coming off of levels of support. So clean energy, outside of the EV space, these are 4 stocks to keep your eyes on from that perspective. All right, so there we go. That's all that I got for today. All right, a little bit of a shorter version of today, but nonetheless, I did not want to forget you guys. While I was going to be away, I still wanted to take the time to put together a Trending Thursday for you, even though it's recorded. People are in the room to try to answer your questions as if we were doing it live. All right, so thank you for being here. This is our first Trending Thursday on this channel, isn't it, Joey? All right. Don't forget, invite people to come to our channel. Do that. Subscribe to the channel. Hit the bell icon, all of the things that you need to do. And I want us to keep, wow, Joey, really? All right, so I want us to keep our channels growing. You guys are awesome. VV Nation is amazing. Pushing us to grow to the point that we have 2 channels now. Let's keep it going, all right? And I'm going to try to do the best that I can to bring you all the best content that I can. And man, this is a new, exciting first new step for us. All right, so with that, folks, thank you for being here. I will, by the time you get this, I will be in hot Tampa. It's going to be hot in Tampa. Ooh-wee. But it's for a good reason. All right. So until the next time, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Salam, shalom, namaste, yasu. Till the next time, folks. See ya.